You're listening to the Practical Wealth Show with Curtis May.
All right, guys, welcome to another great episode. It's going to be a great episode of the Practical Wealth Show. So I have Miss Heather Dreves.
Dreves.
It's
all right.
Like, as soon as I was going to say it, I went blank, right? So let me tell you about Heather. Heather's the Director of Funding at Secured Investment Corp and fund manager with one of the fastest growing companies in the private money marketplace. Focusing in the U.S. on residential real estate investments, Heather's about helping self-employed entrepreneurs and their families build wealth and succeed in their business ventures, and helping investors deploy capital that is looking for high yield passive investment backed by real estate. Okay, secured by real estate, right? And so she has been she has seen real estate investors succeed and fail, and is committed to tipping the scale on this side of success for everybody she can. All right. And so Heather, welcome to the Practical Wealth Show.
Thank you for having me. I'm excited to be here.
Good. I'm excited to have you. So tell them what I didn't tell them. And what we're going to talk about today is what did I say we were going to talk about? We're going to talk about really kind of a beginner's guide to first lien position notes. We're going to talk about due diligence of looking for good operators, and whatever else you want to throw in there, because I know you do accountability and helping people be good investors. You know, so.
Yeah.
It might be a long one. So
well,
go ahead.
Yeah, our company's pretty broad. I mean, first, just to kind of set the tone, we help all kinds of real estate investors. And what I mean by that is, if you're an active real estate investor, meaning you're out there buying properties, fixing and flipping, holding for rentals, we do have opportunities to help you with funding. So we're what's considered a private lender. So we are a lender that provides financing to real estate investors outside of your more traditional sources like a bank. So I've been in this industry 20 years, but really what my main focus on is really with the passive investors. So these are clients that may or may not already be actively investing in real estate, but they're also looking for a pathway to generational wealth. And so the clients that I work with have started to take their investments into their own hands and go outside of your more traditional sources like a money manager or a financial advisor. And I'm not here to tell you to leave your money manager or your financial advisor, but what I am here to do is to educate people that there's other options out there that are what are considered alternative investment options, and they focus around real estate. And so that's what we really do here also, in addition to providing funding, is we work with clients, and some of them are just getting started. Some of them are, hey, I want to start investing. They're young, or they haven't started investing and they're a little late to the game. Others have quite a bit. I work with a lot of dentists, for example, that have sold their practices and now they have this large amount of capital, and they're saying, I don't really want to dump it into the stock market. I understand real estate. I like it as an asset class, but I need the tools to start investing in. And so that's really what we do here, is we really just work and educate people and determine, what are they trying to accomplish? Are you active? Are you passive? Are you trying to create cash flow? Are you more growth minded? And then we have lots of different opportunities to really assist those clients with their pathway to financial freedom, is really what our focus is.
Heather, you speak in our language here on the Practical Wealth Show. That is our theme is kind of wealth outside of Wall Street. Yep. Our goal is to be financially free, passive income greater than expenses. And there's a lot of ways to skin a cat, but you gotta. And so what we talk about is there's 4 asset classes, right? Business, real estate, paper, and commodities. And so what I hear is really a combination of really you're more paper tied to real estate.
Yes.
Notes and that kind of stuff. And so let's start with taking smaller, mid-tier, in your mind, taking them to financial freedom and how you assist them.
Sure. So like I said, the first thing that I do with my clients is really determine what they're trying to accomplish. Are they retired and sold businesses and trying to replace their income and create cash flow? So I think in the past, traditionally, you see all these retirement plans. How much money do I have to save to retire? I don't really look at it that way. I look at how much cash flow do I need?
Yes.
1,000%.
That's right.
Yeah. What are you earning on it? You may have $100,000 and you're earning 2%. or you could have $100,000 tucked away and you're earning 10%. Like that cash flow is very different, right? And so really like, what are they trying to accomplish? So my really passive people that are trying to replace income and live off their earnings rather than deplete their capital that they've saved,
Right.
is much different than my client that is just getting started and is like, hey, I'm young, I'm just getting started. I want to put everything in growth mode. I don't need the cash flow. I have a daytime job, but I want to grow those accounts as fast and as big as I can. And a lot of our clients use self-directed IRAs. That's a really awesome way to grow accounts tax deferred. So first, figuring out what they're trying to accomplish and then backing into it and understanding how risk adverse they are, because essentially we have two options. You can invest in our real estate funds or you can buy notes from us. And I will tell you, they are the same asset class. The notes that we sell are the notes that are in our fund. But what I mean by that is my guy that says, hey, I want to buy a note because if they don't pay, I'll take that property back all day long because they have a huge equity play in it, is a very active, more risk adverse client than my guy that's like, hey, I want a vacation. I'm retired. I don't want the headaches of foreclosing on a note. The funds are a better option. So I guess really educating and getting to know our clients and first determining what they're trying to accomplish. And then me and my team can back into giving suggestions. We're not financial advisors. I'm not going to look at your whole portfolio, but what I can do is educate you about the different options and the different rates of returns that you can yield that may assist them in accomplishing their goals.
That's good stuff. I want to dig into that, but I want to back into, so a lot of this is a talk that we had that I think is major, because when you're looking at somebody, because when you're looking at somebody to deploy your capital with, you can't just, marry the first pretty girl you kiss.
Yeah.
I was trying to think of a more technical that came to mind.
I love it.
And so how do you know? You need to do, I was watching something on YouTube. It's like, here's how girls think. I'm stalking you. I'm looking at your Instagram, look at that. It was hilarious. But, and so how do you do, because a lot of times we don't really know how to do due diligence. So it looks good. It's a great PowerPoint, but how do I know you're real? And what you told, when you told me about your process and how you help people look through that, I thought that was brilliant, because I think that people don't even know what they don't know.
They don't. And it's terrifying how trusting people are. I mean, I get calls all the time. Hey, I talked to you 6 months ago. I got greedy. I found someone that said they'd pay me a higher rate and now I'm in trouble and I didn't do any due diligence. And it's like, my job is to educate people how to do their due diligence, not only on us, but on any operator out there. And I tell my team this all the time. The asset that people are investing in is important, but I don't think it's as important as the due diligence on the operator. You are investing in the team behind that asset, right? Did they do their due diligence? What does that look like? And so I think there's two sides to that. With the notes, your due diligence is really on that borrower. And when we sell notes, we actually provide and so just to clarify, when you buy a note, you're buying a lien against a property. And when we sell our notes, these are liens that we've already created. So
basically you're the bank, you're buying the mortgage. So when instead of having toilets, tenants, and termites, you're the bank, right? You get the mortgage. Okay, right.
Yeah.
Okay.
And the way that you make money is that borrower makes payments. Hypothetically, in a perfect world, that borrower makes their payments every month. And then when they pay the loan off, your principal is returned.
I love that. See, listen, who has all the big buildings downtown? The banks, okay? Because real estate investors think the asset is the property, but a bank is in the money business and they see the asset as the note and they just want you to make payments. And so to me, you got to have a healthy balance of both and understanding where the bread is buttered and looking at that. So go ahead.
No, that's a perfect segue, because when you're buying that lien, you better understand who the borrower is and what the asset is. Those are the two most important things. And I think private money in the past has gotten this bad rap that they only care about the asset. It's important, but my opinion is it's just as important to understand who you're lending the money to. What is their financial wherewithal? Great, they've got a great deal, but do they have any ability to make the payments, to rehab what is their experience? Have they ever rehabbed a project? I will tell you a real life scenario. Yesterday, we had lender committee, and we had a deal come to us, and this lady was buying a property in Florida. The house was built in 1882. It was her first rehab. It was a 7-bedroom, 3-bathroom house. It was on pier, on block. So the house had to be jacked up. She had nothing in her bid for foundation issues. Her bid wasn't enough. She's never done this. And we were like, not only is this not a good deal for us, but in all honesty, I'm more concerned about putting this lady in this deal because there is no way we were setting her up for success. She would have failed. She couldn't service the debt. She would never have finished the rehab. And so unfortunately, we had to have that conversation with her. Like, not our biggest concern is that it's not a good deal for us. This is not a good deal for you. And so understanding what your borrower's strengths are, have they done, maybe if that was someone that had done 20 other projects like that, we would have done that deal all day long. There was tons of equity in it, but setting her up for success was not going to happen with that deal. And so understanding, I guess my point is, who your borrower is. Like, do they have experience? Have they done this before? If they haven't, what kind of a project is this, something that they can successfully get in and out of and make money? And then I think you back into it. Like, what is my asset? Because at the end of the day, if that borrower fails, you're taking that property back, and you better be prepared as the lien
Do
holder.
I want to own this
Do
property?
you want to own that? And if the answer is yes, then it's a good deal, right? But if the answer is no, then that's not the right deal. And so we look at both. We look at the strength of the borrower and their experience. And then we also look at the asset. Is there enough equity? And what you have to do, is there enough equity in there that I can foreclose? I can take the property back. I might have to rehab it. Maybe I have to evict tenants. And with a 30% equity play, at least, we don't lend more than 70% of the value, then typically you can get out whole and make some money. Like, our notes typically pay 8 to 10%. But in the event of foreclosure, I've had people make 20% on their money. It's not our goal, but you have to look at that if you're buying notes. Like, what is the risk? And
what's your exit strategy? How are you going to?
And be prepared to foreclose. I get these lenders that, I don't want to foreclose on it. Hey, this guy hasn't paid payments for 60 days. You have to foreclose on him. And foreclosure notices do one of two things. It gets someone's attention real quick that they need to make their payments, or at least gets the ball rolling. And as an investor and a lender, you get that property back quickly, because that's how you're most successful. Limping guys along and not letting them pay never ends well. So I just don't think it's for the faint at heart.
Right.
Is my point.
So let me clarify. So if they do so we're talking about a first lien note.
Yes.
Right now.
First liens.
And so if they're doing that, they're getting not, because I know you have two things going on, a fund, and this is you're buying the note on XYZ Main Street property.
Yes.
Okay. And I like that. Actually, I have some people that do that. Right? So I'm really excited about that, because I like paper and cash flow. But okay. And so now the due diligence part is what you just did, and you're going to teach them, or you've done some of that, but you're going to walk them through how to look at that.
Yeah. So our process with our liens that we sell, one, we only sell the liens we originate. So just for clarification, we're not out buying other people's paper. These are loans that we put through an underwriting process. They meet our guidelines. We close them. So we close them like we're keeping them. There's no guarantee we're going to sell it.
So they're performing notes. I mean,
they're performing notes.
Okay.
Yep. So we sell them at par. We don't discount them. When I work with an investor, and I work with Curtis, and he says, I want to look at deals out of Texas. And I tell my people, if you're going to start looking at notes, you need to put a little matrix together. And what I mean by that is, maybe it's location. I only like deals in Texas. I only want deals under 100 grand. I only determine 4 or 5 things that are things you want to see in deals. Otherwise, they get analysis paralysis. They look at all these liens and they can't. So I'll work with you. I'll say, okay, hey, Curtis, what are your hot spots? We'll find you some deals. We give you what we call a loan package. So everything that we use to underwrite the file, borrower's credit, title insurance, make sure you have title insurance. That's a big one. Evidence of hazard insurance, the appraisal, the rehab bid, everything that we use to underwrite it, I'm going to provide Curtis with. And I'm going to say, here's everything that we use to underwrite it. You do your due diligence. So make sure, again, you understand what you're getting into, what the property's about and what the borrower is about. And if everything checks your boxes, then you move forward and we draw up transfer docs. Now we transfer our interest in the promissory note and the security instrument to Curtis, and we record it at the county. Now you're officially the lien holder and you have the legal right to foreclose. So that's kind of the process.
That's cool. I mean, a lot of people don't realize that. I tell people, look, I have a client, that's his business. He buys notes and they're shocked. Like you could actually do that.
Yeah.
And it's like a little subculture in the real estate investing business. You got to kind of stuff. It's like note conferences all over the place, but he kind of fell into it. And that is very interesting.
Well, and you get people that want to do this themselves and lend their money. And I hear horror stories. It's like, we have a massive team here. We have an underwriting, we have a loan officer and a processor that are getting the deals. We have an underwriting team that underwrites it. We service all the notes. Like I'm not here to say you can't do this yourself, but I hear more horror stories of guys trying to do this themselves. Right. And they're like, I met this guy at an REI club and I lent him money and oh my God, he never recorded anything against the property and I didn't pull title insurance. And it's like, oh my God.
Right.
Don't do that ever again.
Like, yeah. So it's that my favorite book last year was Who Not How. Right.
Yeah.
And so business is a team sport. So like if you can get somebody, they've done their homework, they've originated, you still have to do your homework, but at least it's coming from a good source and it's already performing. And so that's it. So if you've got, not telling you where to invest in, but here's how you think about this. So a lot of you are clients and you have money in your private bank, your insurance policies. That's a good place. If the money passed what I call your emergency fund, right? You don't use your last dollar, right? So I always want you to have 50% of the capital in the policies. And we've got some people with self-directed IRAs. Heather, I don't like buying real estate with self-directed IRAs, but I love notes and paper type assets because if you buy real estate, you lose all the tax advantages of the real estate. But I love the notes or life settlements or things like that. That's why I like life. When I see these, I have people come on my show, they want to talk about self-directed IRAs, how to buy real estate with self-directed IRAs. See, they're marketing and it sounds sexy. And a lot of people have a lot of capital in there, but it's not really good for you. Per se, from a tax standpoint. It's just better. It's not as efficient to pay cash and all you get is the cash flow and you don't get any of the other good stuff. So that's, I love that. All right, let me calm down. My head is spinning.
I mean, and some of the downsides to buying notes is one. Downsides?
All right, no, go ahead.
Well, I mean, like I tell people, and I probably scare off more people, but it's like, I want you to understand what you're getting into and the risk. And hey, if your guy doesn't pay, you, Curtis, need to be able to say, hey, foreclose on them, then you're gonna have to pay foreclosure costs. And so I guess for like my clients that really truly want to live off cash flow, it's like, in a perfect world, they all pay. And I'd say our default rate is under 3% because the thing is, these borrowers have tons of equity. They have cash into it. More often than not, they don't just walk away unless they're like in dire straits, right? But I also don't want my retired couple that's counting on living off of the cash flow. If that guy doesn't pay, you just be mindful that your cash flow stops too. My note guys are more risk adverse. They love the cash flow, but that's not the play, right? It's the long-term play. And like you said, especially for like IRA accounts, it's a great way to grow those. The fund is a little more passive. And the reality is those notes that we sell are the same notes in the fund. Wow. So it's the same asset. It's just how hands-on do you want to be? And with the fund, you can actually invest as little as $1,000. So people with smaller dollars, the fund might be a better option because with the notes, you have to buy the whole note. So if it's a $50,000 note, you have to fund $50,000.
And so is the fund more of a appreciation or cash flow back into the IRA or whatever? Like, how does that work?
So yeah, the assets that are held in the fund are the notes. So there is no opportunity for depreciation or appreciation. However, with the funds, and this is a really cool thing with IRA accounts, you can reinvest your earnings. So like, for example, if you own a note and you bought it through your IRA, those interest payments go back to your IRA, then you got to wait till you have enough to reinvest it. With the fund, you can just roll your earnings back into the fund at the end of the year, we get with your self-directed custodian. We say, hey, here's Curtis's fair market evaluation. His account is worth XYZ now. And so your money's always working. You don't have undeployed capital. So that is one benefit to investing in the fund with IRA funds too.
That's interesting, folks. I like that. We're talking about that because that's something people could do. And that's what I want you to do. Well, I always tell people, investing is about becoming more than it is buying. But sometimes you just, okay, I've got some capital and here is something I can do outside of Wall Street. I'm a dentist. I've got my successful business. A lot of times, even with me, I don't feel like figuring a lot of this crap out because I can make my business make money. And I'd rather focus on that. But I do want other money coming in, or really cash flow, right?
Yeah.
So that if I don't want to work, let's say I want to go away for a month, I want to be able to do that.
I know. Well, and like I said, that's why I said, when I talk with the clients, it's like, what are you trying to accomplish? How hands-on do you want to be? Do you want cash flow? Do you want growth? And so that's how I think we best service our clients, is really understanding their goals. And with the funds, you can do small dollars. I get these people that call all the time. Oh, I have this old 401k I never did anything with from 2 employers ago. And the funds are yielding 8 to 10%. It's like, take that 401k, roll that over to a self-directed custodian so you don't have any tax implications, right? You're not taking a disbursement on it. You're keeping it as tax deferred, but now you can get it to work for you. It's sitting there doing most of the time nothing,
or less than nothing. Right? Less than nothing, and in custodial fees, but losing money and fluctuating because it's correlated with the markets. And so a lot of times we talk about is, you want liquidity, but you want like having non-correlated assets. So some bombing in Paris doesn't affect your money. We want to separate that out. Let's talk. Tell me about that. What is it? That company we were talking about before. I think it was off air. It's part of the due diligence process that y'all do, that people can begin to. And when she says an operator, when you say, tell them when you say operators, just so I was going to say it, but I'll let you say it. What does that mean? And because that's syndications, tell them what that is.
So, for example, we are an operator. We are a fund management company. We manage the funds. We make decisions on the day-to-day activities of the funds. So some people call them fund managers. Operators is a pretty common name in the industry. And I will tell you, real estate funds are funny. You have different types of funds, and we have 2 funds essentially. We have a accredited investor fund for high net worth individuals that they have to qualify with $1 million in assets or income. And then we have what's called a Regulation A+ fund, which is essentially a fund that the SEC says anybody can invest in, but it's very regulated. Your accredited investor funds are not very regulated. So you get operators out in the industry that are not good characters. As long as people are I have a guy right now that's dealing with one out of Utah, and he's like, I didn't think anything was wrong because I started getting payments, and then he didn't get payments. And now he's realizing it was this big Ponzi scheme. And people are very trusting. I get people all the time. I talked to this guy and I didn't do my due diligence. Now there is companies out there that are like this company called Verivest. So our funds are fully audited. We pay a third-party auditing firm that comes in every year, and they audit the financials and the activities of the fund. So if you're out there talking with anybody, the first question I would ask, do you audit your funds? And if they are audited, I want to see your audited financials. And if they can't give that to you, that's a red flag. It doesn't mean that they're a bad operator, but most real estate funds should be auditing their funds.
And so let me clear this up. At your behest, you get them to come in and audit. You've asked them to come audit you.
Yes.
Just so to make sure you're doing it right and everything's above board and your business is really tight. That's a good point. That a lot of people don't, an audit. Y'all hear an audit. Oh, y'all being audited. No, they want to be audited because they're managing money and they want to make sure they're good stewards of your money.
Yes. Yeah. And so I guess it's probably the terminology when people hear audit, think, oh, IRS audit. No, it is audited financials. And we are required for it on one of our funds and not the other fund, but we always do it. Like we've always bared the expense of it because it's in the best interest of us and our investors. So what has happened recently in the industry is there is a third-party company called Verivest, and they have a big passion for recognizing good operators and also recognizing bad operators in the industry, because so many people are starting to invest in real estate funds and look for things outside of your more traditional stock market investments. And so they have a platform where operators like us, at our own discretion and decision, can go to them and say, we want you guys to do compliance on us so that we can put your gold seal of approval on our funds and say, not only do we have our funds audited, but we go another step and we have Verivest do compliance on us, because audits only happen every 12 months and a lot of stuff can happen within a 12-month period. So what Verivest does is they come in and they do quarterly compliance on us, and we pay them to do this, and they put us on their website as Verivest approved that they've done compliance on us. And what they're trying to do is weed out bad operators. So as an investor, Curtis, you could go to Verivest and say, hey, I'm looking at investing in this fund and I don't see them on your website. Could I send them to you and could you do compliance on them? And they will actually do that. And so they have a lot of, if you go to Verivest website, you can see they've done compliance on a lot of operators, but it's a way for you to protect yourself as an investor, that if you are trying to make an investment, do business with someone that's not on there, that you actually could have them just check them out to make sure that they're in good standing, that they're acting in good faith and they're good stewards of people's money. Because unfortunately, there are some bad operators out there, and people work way too hard to invest their life savings with people that are not acting in good faith. So it's a great tool.
And see, because what happens is they don't have a lot of, or they feel like they're behind, right?
Yeah.
And they feel like, oh, I hear this is great. And they want to hit a home run because they have to make up for time lost or waiting too long or whatever. Or, oh, I'm 60 now and I only have 200,000 and I need $1 million. And they say they can give me 25%, whatever, right? Something stupid like that. Yeah. And that's, if it's too good to be true, it usually is, okay? But keep digging. It might not be, you just don't understand it, but you need to keep digging. Yeah. And so what Heather's basically, here is a way to get some help to look at stuff. Here are the questions that you need to ask. Here is a third party to do that. And then you've got to do that, because you can't just throw your money at people and not know them. They don't have a track record, how long they've been in business. I mean, basic stuff.
Yeah. And I've actually done a webinar recently on due diligence. And those are some of the things, like ask for audited financials, ask for their track record. Track record's huge, in my opinion. We provide new clients with our fund reports. So we do quarterly, really detailed reports. Ask to see that stuff. Ask for referral. I give previous clients names out, if they let me, to new clients. Poke around at that kind of stuff, but ask how they report. How do you report your earnings? Are you getting a K-1 or a 1099? When did those go out? That's another big question. Like, learn to set your expectations too. If on most syndications, you're not going to get K-1s in a timely fashion, so you're probably going to have to file extensions on your taxes. Those are all really good questions to ask, but do your homework before making an investment. I'm really kind of surprised at the amount of people that, and I think they're chasing yield to your point. Like, whether they're behind the 8 ball with their investing and their retirement, or they just get caught up in chasing yield. If it seems too good to be true, I would dig a little further, because it probably is. Right,
exactly. And so that's the deal. So let's talk about, how did you get into, because I meant to ask you this up front, like, get into this world?
It's actually kind of a funny story. I went to college to be a teacher and decided I did not want to go down the teaching route after graduating, which is funny because I don't think of myself as an educator, and my kids could attest to that because I was terrible at helping with homework. They're like, thank God you didn't homeschool us. Right. But the funny thing was, I was on a podcast the other day and the lady goes, but you are an educator. You educate people about alternative investing. And I was like, I have never put that connection together. But anyways, so went to school to be a teacher, decided that wasn't the path I wanted to go, was kind of always in sales and it intrigued me, and I just really liked working with clients. Had a friend that was in private money. He said, why don't you come work with me? I'm like, I don't even know what private money is. This is 20 years ago. He said, I'll teach you all about it. So it was eye-opening. One, from a real estate investment perspective, I had no idea that this alternative funding was out there. I thought you always had to go to a bank. And as we all know, if you're active investing, banks are a nightmare to deal with when you're talking about rehabbing houses and buying distressed properties. So that was eye-opening. My husband and I started investing in real estate, but then I really started gravitating towards working with the investors and helping them, seeing how I could help them create wealth and passive income. And they have saved their whole lives, and now they're not having to touch their capital, and they're just living off of their earnings. So really gravitated towards that, got my securities license, and the rest is kind of history. Have kind of always been involved in almost every aspect of it, from underwriting to servicing it to investor relations. So that was kind of my pathway to it.
Wow, that's awesome. Okay. And so I want to talk about the other side real quick. So do you do, for my people, like, oh, she has a private lending company where she loans money. Do you do much of that also? Or is that your, like, you say you do that, but like, are you focused on one side of the company and somebody else does the other? Or are you looking at both? Let's say I've got investors. I have a lot of people that are investors that are looking for capital to do their deals and looking for good money, or
Yeah, so I work with the team that does that. I'm also part of the lender committee, and I'm not in the day-to-day of underwriting, but I've done it. So like, I have clients that invest money with me passively and then also get funding. So we can always put them in touch with one of our loan officers.
Well, I guess you got to do the loans because that's where the notes come from, right? You originated, right. That's the inventory. Yep.
Yeah. So we originate probably 40 loans a month right now as a company. So all those deals flow through our funds, and then we sell that paper.
Is that nationwide?
Mm-hmm.
Okay.
Yep.
Okay. So you get some calls from Philly. Well, actually, I got clients all over, but they didn't know where they came from.
We can provide purchase money and rehab money.
That is good to know. All right. Y'all hear that? So when we give her your note, y'all need to reach out. Okay. Heather, what didn't I ask you? Because tell me about how you educate. So I know you do seminars and accountability program. Who is that for?
So I would say that's probably more for our active clients that are either just getting and starting in investing in real estate. So they want to learn how to find the deals, how to write an offer. We teach them different calculations for highest and best offer, because it's about the numbers, right?
Okay.
If the numbers aren't there, don't waste your time. We also teach them how to actively rehab properties. So maybe this is, for example, the investor that has a deal, now they need to put a budget together. They need to manage contractors. We have a program that teaches that. And then the other thing that we educate people on is how to set up your brokered business. So there is a massive opportunity in brokering loans. And when I say broker loans, I don't mean being a traditional licensed mortgage broker, but brokering loans for non-owner occupied investment properties. We actually have a program, it's called the broker certification, and we will teach them, here's how to set up your business, here's how to broker loans. A lot of those clients broker loans to us, but we encourage and teach them how to broker them everywhere. There's everything from brokering your fix and flip loan to commercial, to multifamily, to land. There's a pretty big opportunity out there. So we kind of have this massive gamut, and we do what's called a funding tour. And if they go to the Lee Arnold system of real estate, they can actually sign up. They're all virtual classes, but the funding tour is a nice place to start, because then they can decide which pathway they're looking at. Am I really an active investor, or would I rather just broker loans or wholesale deals? And then they can kind of determine what direction that they want to go from the funding tour. That just kind of gives them a big overlay of the program, and it's all online. We do everything virtual now because of COVID. We actually realized
you don't want to go back.
Yeah, we don't need to do these in person, and people like it better. They can sit at home, they can do it at night, and then decide if it's a good fit for them.
That's fascinating. So what's the future of the future you see in real estate with inflation with pricing the way it is? Are you excited about it, or what do you
Yeah.
see coming
We
down
see
the
it as a
pipeline?
big opportunity. I will tell you, as far as the way that we manage our portfolio, 4 or 5 years ago, fix and flipping properties was very good for us, very profitable. Now that prices have increased, well, they're not as profitable, but we also see an opportunity with inflation and interest rates going up. There's a massive opportunity in rentals. And that is something that we're focusing on right now. And some of them are single family rentals. We're also focusing on duplexes and fourplexes and smaller multifamily. We just purchased a 22 unit complex in Spokane. So what I would say is, as an investor, you have to be able to pivot. You cannot get so pigeonholed that this is all I do. I only focus on residential. You have to adjust with the markets and always be ahead of the game, educating yourself, reading what's going on, understand how interest rates affect pricing. Interest rates go up, affordability goes down. In our local market, we're not seeing prices decrease, but they are starting to level off, and people can't afford to buy as much of a house as they were a year ago when rates were 3%. So you have to understand how that affects the markets. And as a real estate investor, be able to adjust your focus too, because there's always opportunity in real estate. The best place you could be in an inflationary period is in real estate,
Right.
but you just have to adjust to that.
So you got to learn the game. You got to
Yep.
learn, and I try to get people to think more macroeconomically so you can see what's going on. Mentor told me, like, what's going on, you'll know what to do. And so you have to not just be tunnel vision about this one thing. I do fix and flips. It's like, all right, well, interest rates are up. Why are interest rates up? And who does that help? And who does that hurt? And you need to align yourself with the interests of the powers that be, you know. And because inflation helps a lot of people, everybody's not losing. Everybody I was listening to a friend of mine's podcast, during wars, everybody doesn't lose. I mean, some people are winning. And so you just got to figure out how to position yourself, how to win. Yeah. That's good stuff. Heather, this is my catch-all to make sure I didn't miss anything good. What do you wish I'd asked you that I haven't asked you?
Where to get a hold of me?
Well, I'm going to that now, but I just make sure
I don't know. I feel like we've covered so much, and my main focus is the passive investing side of it. But I also understand that there's so many different types of investors out there, and it doesn't mean you can't do it all. Clients that actively own real estate, but then they're on the passive side. My biggest thing that I would hope people take away is get involved. I think people have always had this opinion that I got to have $50,000 to start investing. That's not the case. I mean, we have a fund that you put $1,000 in. You can start with $1,000. But if people don't take that initiative to start doing it, they will never have financial freedom. And you have to start somewhere. Even if you're behind the 8 ball and you should have started doing it 10 years, start doing it now. Like, you have to take action. Yeah,
I agree. So now, Heather, tell them how y'all should be excited, right? So how can they, and we'll put everything in the show notes, but where would you like them to go? How can they reach out to you and follow you and all that good stuff?
Absolutely. So they can visit our website at securedinvestmentcorp.com. They'll find on that website information about our funds, information about the notes that you and I spoke about. But they can also schedule a 15-minute phone consultation with me and my team that I highly encourage people to do. We can get a little more into the weeds with some of the stuff we talked about. We can help determine what they're trying to accomplish and how we could possibly service them. So again, that website is securedinvestmentcorp.com.
Okay. So we will have all this in the show notes. Heather, thank you so much. This has been phenomenal. I love this.
Yeah.
You're a great host. I want you to come back, and I may have like a mastermind thing where we can
I would love to
one
do
of your
that.
slide deck so we can go deep in this stuff for our membership community. So Heather, thank you for joining us on the Practical Wealth Show, guys. Go out there, make sure you take some notes. We're going to have everything in the show notes, so y'all follow up. If you got $1,000, not telling you where to invest, but you should, if your money's sitting around in an old CD 401k or IRAs that are sitting around doing nothing, you should call me, but I'll introduce you to her but call her direct so we can work together. But basically, money's got to be working. You can't have your money lazy money. It's all got to be working for you. It's like you paying employees, but they're asleep on the job. You have to put the money to work. So guys, I hope you enjoyed this episode. Go out there and make sure you reach out. and check out her website. Follow her on LinkedIn. You can, connect. I'm looking at your stuff on there. So but basically the website, I would say the main thing, and reach out and schedule a call if you have any questions. And so if you like this episode, give us a share. Give us a what's it called? What do you call it? A thing where you like the show, not a like, but not testimony. What's the word? We don't do testimony. I forget the term right now. Just write me something nice, a review, and share it, and make sure you reach out to Heather. Heather, thank you so much for.
Thanks for having me. It was great. I feel like we could have talked forever.
We could have talked forever, and I told you how I interview. Right? I don't like you. It's a really short call. So, and now that I like you, I want you back. So,
all right. I'd come back in a minute.
All right. Thank you, guys. Thank you, Heather, and go out there and have a great day.
Thanks for listening to Practical Wealth. To access the show notes and resources, go to practicalwealthshow.com. To get your questions on the show, go to practicalwealthshow.com. This show is for entertainment purposes only. Before you make any investment decisions, consult a professional. This show is copyrighted by Practical Wealth. Written permission must be